Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned in to the Investor Show. We're going to be talking about stocks jumping 600 points, the stimulus package, the $1.9 trillion stimulus package that's headed to the House, and we're going to be talking about the SEC companies from trading. Yes, ladies and gentlemen, you're going to get all that today on the Investor Show. If you're catching that live, yes, I am live right now. I know sometimes I have replays that are live, but yes, I'm live right now. So if you're catching this live, tell me where you're from, tell me where you're checking into, all the other great stuff. So hopefully my audio sounds way better and good and all the good stuff like that. But I hope you guys and girls enjoyed today's episode. So we're going to be talking about that tech stock had a huge rebound today. We're going to, of course, when we talk about the SEC suspending tradings on companies and how that's going to tie into as an investor with the things that we see with GameStop and the new age of Reddit, the Reddit investor, right? And we're going to be talking about the stimulus package heading over to the House. And we're going to be talking about chasing the bull. Chasing the bull. So y'all tell me where you're from. I'm going to get to y'all comments. But ladies and gentlemen, if you haven't done so already, go ahead and make sure.
Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button.
Yes, ladies and gentlemen, we are back here live. This is your host, Prince Dykes, coming all the way live from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So the first thing we're going to talk about, that 600-point jump that we've seen today in the Dow Jones, 600 points, that big rebound. Just last week, 2 weeks ago, everybody said, hey, the stock market is crashing. Prince, you said it was a bull market. Why is it going down? Of course, I'm not a genius. I don't know what the market is doing because, of course, if I did, I'd be a trillionaire. But I don't know what the market is doing. But I made this argument of saying, hey, what if 2020 was our reset button, and now we're running into a new bull market? And I compared the 2020, what happened in 2020 when we seen the pandemic shock hit the market, compared to in 2008. My 2008 mistake, comparing it to 2020. And the whole point of that topic was, from 2008, we hit that market, hit the bottom, and we got out around about 2009. So from 2009 all the way into 2020, we had a bull market, and I didn't take full advantage of the market because I was anticipating the next drop. Because that whole time I was in the bull market, we still had, the market had bad days, it had bad weeks, it had bad months, all type of things was happening. People were saying all the time how the market was going to crash, how we had too much stimulus, how the world was coming to an end, all those things. We was in Iraq, we was fighting in the war in Iraq. Myself, I was in Afghanistan, and then put that around. We was in Afghanistan. I was in Iraq. We was in Afghanistan and Iraq in 2007, 2008. We saw these companies crashing. We had a change of president. We went from President Bush to Obama. Then we went from President Obama to President Trump. We had all type of things going on. And I was so caught up. I was so close to the market that I couldn't step away and acknowledge and take advantage of that bull market. Now, I want to ask you guys and girls this: in 2020, what if 2020 was that big shock that we needed and it's taking us into a new bull market? We don't know that, right? So essentially, I'm going to get into that big tech stock rebound that we saw today and all these companies, and to put everything back together. But let me see what y'all say in the comments so we can. And also, we're going to do that. I'm going to do a review of CCIV today. I will do a review of CCIV today. I think that's Churchill. Yes, Churchill Capital. Churchill Capital, I'm going to do a review. That's the hot thing on the market right now, that spec industry, that blank check company. So I'm going to do that as well. So let me see what you guys and girls are saying in the comments. Miss Mellon, how you doing? She said, good evening, sir. How you doing, Miss Mellon? She said, I like the new intro. Thanks. Andre said he likes the beat. Hold on, you know what? Let me play the beat here. Here's the beat right here. Yeah, that's my beat. Hopefully they don't come back and sue me for that beat. But anyway, we got Lucky's mom here. Says, good evening, Prince and everyone. How you doing, Miss Lucky's mom? I know you're doing pretty good out there in Jacksonville. Congratulations on you. I know your Southwest Airlines is looking pretty good. But we're going to talk about some good stuff today, too. So y'all stay tuned. Dervin Smith says, what's up? Checking in from the lovely island of Oahu. Dervin, out there in Hawaii. I need to get back to Hawaii. One of these days, I'm going to get back down there. Definitely miss it. Still do my show out there. Andre said markets were on fire today. Dre, congrats. Yes, it was. The market was on fire today. Hey, how you doing, Miss Freeman? Sip and talk. She says, good evening. She's out there in South Carolina. Okay, got it. Andre's from South Carolina. Deerfield Beach. Okay, South Carolina's in here tough today. Okay. Okay, we got somebody on Facebook today from Atlanta. Somebody says, hey, Antonio, what's going on? And hold on. Antonio, you're out there in Pennsylvania, right? Philadelphia. He says, good evening, investing family, no problem. D Rock Finance says this fire. And the Tech Monkey says, good evening, Prince. Good evening, everybody. All right. So let's get into it. So just last week, when the market was going down, I mean, we had about like a strong 2 weeks of the market going down, and everybody, we seen Apple was going down. Tesla was forgotten about. Apple was forgotten about. Apple is the largest company in the world, and all these big tech companies, when Apple and Tesla, whatever they do, that's going to take down the NASDAQ. They're the majority of the weight of the NASDAQ. So we've seen all these companies come down, and everybody started talking about bond yields was bringing down the market, which it was. The 10-year bond yield had gone up, and it was taking down the market. It was starting to drag on the market. Interest rates were starting to go up, and everybody got so concerned about, well, is this the market ending? Everybody ran to crypto, things like that. And we're going to get into chasing the bull in a second, but everybody was kind of wondering what's going on. And I came in here and I said, hey, what happened earlier in the year when we ran into that big bull market, when the stock market was going up and everybody felt like they missed out? Everybody told me, Prince, man, I felt like I missed out. I missed out on Enphase. I missed out on green energy. I missed out on which was some of the other hot companies. Pretty much you can just throw a dart at anything and you saw it go up over the last year. But people felt like they missed out on, I missed out on SI. I missed out on Silvergate. All these different companies that we talked about on the show, people felt like they missed out. So I told everybody, well, this is your opportunity. Why not grab them now? But the thing about it, it's an emotional roller coaster when you're sitting close to the market. Myself, I'm guilty of it too. The human factor. I'm like, okay, well, are we having a market downturn? Is this going to be obviously we're having a pullback. How long is this pullback going to last? All those questions people was asking. So I told everybody, this is an opportunity to take advantage. If you're not that smart, and you say, if you're like me and you're not that smart, what you do is you grab the NASDAQ, NASDAQ. You can get that with an ETF, QQQ. Right? You can just say, hey, you know what? Look at the NASDAQ, the Dow Jones, the S&P 500, and the NASDAQ. NASDAQ is going down the most. I can purchase a little bit of the NASDAQ. If I don't want to purchase some of the NASDAQ, what I could do, I could do a leverage. If you want to add more risk to it, you could do a leverage bullish ETF and wait to be correct. That's some way to put your bullish position on steroids. Then you can go in and say, well, look at the NASDAQ. It's drawing down. Look at Tesla is falling. I see Apple is falling. I see all these particular companies are falling. I think this is a rubber band, because of nothing had happened financially to the companies. Now everybody's calling it a rebound, and people was asking me, well, what's happening? Why is the market going down, Prince? I said, well, nothing goes up continuously. Because I tell everybody, if you don't know, guess what you're going to do? You're going to learn, right? That's my wrong button there. Here we go. That's not it. I got to get my button straight. Here it is. I always tell people, here you go. Here it is. There it is.
You're going to learn today. You're going to learn today.
So that's what I always tell people. The great thing about the market is it teaches you, if you don't know, you're going to learn the easy way or the hard way. So think about it. When I look at the market, I'm a bullish person. I will always be bullish. I've always tried to be on the bearish side, meaning betting on downsides and things like that. But I don't like betting on the downside, because when I was a bear, the bear is the downside, ladies and gentlemen. When I was a bear guy, it changed my whole philosophy on life. I would wake up every day hoping the stock market crash. I was hoping the company does bad. And I don't want to walk. And then when everything starts to do bad, I feel like a genius. I feel all good and things like that. And I start to realize I don't even like the philosophy of being a bear person. I'm a positive person. I like positivity. I like things going up. I like things doing well. I like to see people do well. I want to do well. So I don't want to walk around. I don't like being on the bear side, betting on a company to go down, hoping that a company go down. I'm checking my apps and my phones and my laptop all day, hoping this company goes down, wondering why is it not going down, trying to find any little bad piece of news. I don't want to live that life. I like to be positive. I like things just going up. For prime example, everybody asks me out there, well, Prince, what to buy? When you see the market going down like that, the entire market was going down. And it will happen again. It'll probably happen tomorrow. It'll happen again. That's a clear buy signal. If you don't know what to buy, start with what you know. Everywhere I go, McDonald's is thriving in the pandemic. Everywhere I go, I mean, it's not like Chick-fil-A line, but you can't find a drive-through. McDonald's is built for the pandemic. Quick, cheap, fast food. Quick, cheap, fast food that you can just pull up in your car, grab it, whatever, right? That's exactly what people want these days. Anything with a drive-through is winning. And if your drive-through is fast, come on. There you go. So we're talking about that big tech stock sell-off. So the next thing I'm going to get into, ladies and gentlemen, we're going to be talking about the SEC suspends trading on 15 to 25 companies, right? This happened about 2 or 3 days ago, sometime last week, I think it was. And I want to bring this to you. And the reason why I'm bringing this to you is right now, I was watching Kevin O'Leary from the Shark Tank, and he said he was talking about the new age Reddit investor, the new age YouTube investor, the Reddit, the YouTuber, the Robinhood investor. People are calling the new generation the Robinhood. They're calling them the Robinhood tech investor, right? And what I mean by the Robinhood Reddit investor is it's a young crowd, right? I'm still young myself. I had the apps too, where you can download the app on your phone. And when you download this app you can download the app on your phone and you can follow Reddit or you can follow somebody on YouTube and you can mimic everything they're saying. So, people was trying to create these short squeezes, bet against the market, all these type of things. I was wondering, kept asking myself, is this something, let me turn that off there. Is this something new, right? Is this something new or what, right? So when I started to see this, let me see. When I started to see this, I kept asking myself the question, is this a new wave that I'm missing out on? If I can just get on Reddit or YouTube channel or Instagram, get Robinhood and buy whatever they say buy and sell whatever they say sell, will that work? We saw all of this. GameStop, AMC had the market in an uproar. But ladies and gentlemen, I want to let everybody know, what are you up against? The SEC is the Security and Exchange Commission. It is the governing body over the market. And when you are the governing body over the market, what happens when you are the governing body over the market? You are the person, they're the ones that can control the market. If you are a publicly traded company, one day I hope to have a publicly traded company on the NASDAQ or the S&P 500 or the, not the S&P 500, but the NASDAQ or the Dow Jones. If you are a publicly traded company where the public can buy from you, that's a privilege. That's not a right. The SEC can pull you off at any time. They can shut down brokerages at any time. They got that power due to what happened in the roaring 20s, right? On this show, you always hear me talk about the roaring 20s, and the roaring 20s led us into the Great Depression. So the roaring 20s in 1929, everybody was rolling in dough. Everybody was borrowing money, buying all this stuff and stuff like that. We rolled straight into a Great Depression, right? And when we had that Great Depression, Roosevelt came in and said, how can I stop this from happening again? How can I create a governing body? Hence to the SEC. They gave the SEC the power. The SEC controls where I had my licenses. When I passed my Series 65 exam, Series 63 exam, I had to register, right? So I had to register. They are the governing body. FINRA, the SEC, these people are over investment advisors. You can file lawsuits, or you can file lawsuits with the SEC. If somebody has wronged you, things like that or whatever, in a company, you have to register with the SEC. So they're the governing body. And when you're the governing body, I'm going to show, and I'm going to pull up this report here in a second, where we're going to go over exactly what companies they suspended, why they suspended them, and get word for word from the SEC. So everybody that's want to get out there and get on Reddit, everybody that want to get on Robinhood and, try to manipulate the market, that's fine. That's not my job. I'm not here to be the police. I just want to let you know what you are up against. And to let you know, while you on Reddit and Robinhood, so it's the SEC. The SEC is on Reddit. They're on Robinhood. They're on YouTube. They're probably watching me right now. And they're going out there. If I go out there and tell everybody, they know in my portfolio, I own Apple, I own Enphase. I have a call on Apple. I have a call on Enphase. Then I go out there and try to pump this stock to get everybody to go buy it using my following or whatever. I could potentially be charged by the SEC, right? For trying to manipulate the market or, whatever the case may be. That's why if I tell people something, I'm going to tell you what I hold if I talk about something. All right. Or if I have sponsored content, I'm going to tell you this is sponsored, right? Which I don't have. Now here we go. Let's take it. Well, we're gonna jump into this report. Before we jump into this report, let me see what y'all say in the comments. Okay, we got Andre. Andre is from South Florida. Antonio said Gush is his best friend. Antonio, how did you hear about Gush? How did you hear about Gush, Antonio? I'll definitely want to hear about Gush. Dre said he's from, you talking about, I can't say it. Do y'all want to call into the show? I may can open up the phone lines today. I haven't had anybody call into the show. I'll see what y'all say in the comment box if y'all want to call in. DraftKings and I can't even say that. I know who that company is. That's the company that's doing the vaccinations. They're right behind Pfizer. You got Pfizer, Johnson & Johnson's, and I can't even say their name. So, Dunk, what's going on? He said Jacksonville, Florida is in the house. Okay, what's going on, Dunk? Al says, what's going on, Prince? Al, what's going on? LK Ross said, all I know is that I'm glad stocks are up today. I tried to buy several stocks before they spiked today. I could only purchase ZOM. That Zoom got 700. No, Zoom is ZM. So ZM got 500 shares of it. Okay. Yes. Days like today is the days I'm selling. I don't look to buy anything on hot days like today. When I see that rebound coming, I'm in there trying to figure out how much did it rebound? Can I get rid of things like that? So yeah, good, LK Raw. Dervin Smith said, how long do you think the bull market will last? Usually the bull market kind of lasts about somewhere between 3 to 5 years. The last one lasted from 2019. From 2009 was the bottom, and all the way to 2020 when we had the pandemic come around. And in between, we had some little dips, but we had about a 10, 11-year bull the last time, right? Now, what could happen is the bull that we're experiencing now. What could have happened is when we had that big drop, that 20-30% drop last year, it could be the start of a new bull market. Last summer could have been the start of a new bull market, for all we know. That's the question that I'm asking. I'm like, well, could this be the start of what we went through last year when everybody's portfolio just got demolished in March, right? March and April. And then around about May, June, we had a hot summer and it went on into the market just didn't go up every day. It had its ups and downs, but did it push us into a new market that we had never experienced before? All right. Be loving kindness. Live in Colorado and New Jersey. I'm thinking NJ. You said with NJ at the moment, New Jersey at the moment, enjoying my solar going up again. Yes. It's just a pullback. We had a nice big pullback. We got to think about it. When I look at it and I look at a stock, I want it's a stock going down, but when the whole market is going down, the NASDAQ was just getting demolished. That's why I started making investments to the NASDAQ. NASDAQ got demolished. Dow Jones was going down. S&P 500, they're all red. Everybody worried about these bond interest rates and another stimulus and things like that. But we got this great news. I told everybody on the show the stimulus package was going to make it through the House. That was obvious. Now the stimulus package is on to the Senate, which we're going to talk about that in a little bit. Antonio said, I found out about Gush from the investment show, minus the investor. I got to get one. But thanks, Prince, for the show. I'm up 74% on Gush. Yes, I was wondering, Antonio, because you don't hear anybody talk about Gush. Anytime somebody says Gush, I'm like, they get that from this show because you don't really hear anybody talk about Gush, right? That's that energy sector. And we're going to have Uncle James. Y'all comment below if y'all know Uncle James. Y'all remember Uncle James? Uncle James is coming on next Thursday. Right, he's coming on to my show in Hawaii next Thursday, and I got to put him on live here. And he thinks that oil will outperform Bitcoin. I think he's crazy, but he's saying, hey, by the end of this year, you're going to see oil above Bitcoin. And if you got Gush, that's very good for you, right? So Gush is that oil. I forgot what happened big with oil earlier. Yeah, yes, Texas. When it happened down in Texas, when you saw this the big ice age. You know, I always laugh at Texas, not laughing at this situation, but Texas is they always get the extreme. My best friend lives down there. He always talk about Texas, and I always tell him, I'm like, you know, either Texas is very hot, very cold. When they get water, they get a lot of it. They get too much water. It gets too much cold, too much heat. You know, Texas always in the news for going to the extreme. So, but anyway, when that happened in Texas with the cold front they had in Texas, that started to push oil prices up, started to make, because oil prices have been getting beaten down. And everybody that tunes into the show knows that I'm not a big oil component, because I believe oil is a dinosaur. I believe it's going away. I believe we're going to be going into things like hydrogen and things like green energy and solar panels and electric cars. Look at GM. They're going completely electric by 2035. Look at the state of California. They're talking about not selling electric cars after 2030. So I'm kind of wondering what oil will be in the future. But congratulations, Antonio, on your being up 74%. I knew you probably got that from the show. That's why I was just making sure. I just want to give my proud. Just can I pat myself on the back? But let's give a congratulations, Antonio, for the 74%. Congratulations, man. Congratulations. However you get the information, I don't care how you get it. As long as you make the money, I'm congratulating you on that. All right. So let's look into this. Let's see what the SEC did. Let's pull it up. All right. Here we go. So I want you guys and girls to be aware of what you are. Now, this is not coming from me. This is not coming from something that I heard. Ladies and gentlemen, you can find this press release on the sec.gov. This was released on February 26th, last Thursday, I think that is. My math is not off. When's last week? I know it's last week. So right here, the title is the SEC suspends trading in multiple issuers based on social media and trading activity. Based on what? Social media and trading activity. This is the game plan of what we see with Reddit, right? What Reddit became very popular for. What we've seen with people on social media, I even seen Facebook groups say, hey, let's get together and run this stock up. This letting you know right here. I want to let you know part of what they're saying. So right here, let's go from word. For immediate release, Washington, D.C., February 26, 2021. As part of its continuing effort to respond to potential attempts to exploit investors during recent market volatilities, the Security and Exchange Commission today suspended trading in the securities of 15 companies because of questionable trading and social media activity. Today's action follows the recent suspension of securities of numerous other issues, many which may have also been targets of apparent social media attempts to officially inflate their stock prices. So right here, they're saying, hey, people are trying to artificially inflate their stock prices, aka move the stock prices up. Everybody jump in, buy this at one time. The SEC continues to review market and trading data to identify other securities where the public interest and the protection of investors require trading suspensions, right? So they're looking to, so right here, they're telling you, we're looking at social media and we're looking at the public interest and we're trying to find other places that they're looking to do this some more, right? They're looking to do this some more. This is not a one-time thing. They're saying, hey, we got our eye on this. We know this is happening and we're looking to do this some more, right? So right here, the SEC's recent suspension of trading in nearly 24 securities, including 15 today, are one facet of our ongoing efforts. I should put my glasses on, huh? Let me blow this up a little bit. I'm in here, strain my eyes. Okay. And our ongoing, okay, here we go. The SEC recently suspensions of trading in nearly 24 securities, including 15 today, are one facet of our ongoing effort to police the market and protect investors. They're policing the market and protecting the investors, says Miss Melissa Hodgman, acting director of the SEC's Division of Enforcement. We are proactively, ladies and gentlemen, this is what the acting director of the SEC's Division of Enforcement says, quote unquote. Here we go. This is what she says. We are proactively monitoring for suspicious trading activity tied to stock promotions on social media and act quickly to stop that trading when appropriate to safeguard the public interest. We also remind investors to exercise caution and do their due diligence before investing generally, including companies that are promoted on social media. So, this is the acting director of the SEC Division of Enforcement. They're telling you we are proactively monitoring for suspicious trading activities tied to stock promotions on social media. So you see all these people that say, hey, buy this stock right now. Everybody buy this CCBB, ABCDEFG. And some people will make money. Some people have made money, right? I know people who rob houses and make money. But then again, as soon as I get out there and say, you know what, man, y'all robbing the house, making a lot of money. Let me get over there too. As soon as you walk in there, knowing my luck, especially when I was a kid, as soon as I tried to follow everybody else, what end up happening to me every time? I get caught. My friend's been getting away for 10 years, but as soon as I do it one time, I get caught. Don't be the person to get caught with that. That's all I'm saying, right? So when you look at social media, they're telling you right here today. Now here it goes. They're going to break it down to the companies they suspended. Word for word, today's order states that trading has been suspended because of questions about recent increase in activity and volatility in the trading of these issuers, as well as the influence of certain social media accounts on the trading activity. The order also states that none of the issuers has filed any information with the SEC or OTC markets, where the company securities are quoted for over a year. As a result, the SEC suspended trading for the following securities. I'm going to just take the symbol because I can't pronounce all these companies. BBDA, Blue Shear, BLSP. I haven't heard none of these companies. EHOS, EVTI, AXCG, Green Energy Enterprises, GYOG, HL. So they named out all these companies. So they got a bunch of companies. Then they said the SEC also has recently ordered temporary suspending tradings on BNGI, UNGS, PDRP, APVX, All Grades Mineral, HY11, SECI. Each of these orders stated that the suspensions were due to at least part in questions where the social media accounts have been attempting to artificially increase companies' share prices. Each of these companies stated that suspensions were due to at least in part questions about where the social media accounts have been attempting to artificially increase company share prices. Under the federal securities law, the SEC can suspend trading in a stock for 10 days and generally prohibit a broker dealer from soliciting investors to buy or sell the stock until uncertain reports requirements are met. The SEC investors education is okay, whatever. All right. So right here, ladies and gentlemen, I want y'all to see that is word for word coming from the SEC. This is word for word. So when people get out there and they say, hey, y'all, let's get together and let's buy, everybody put $10,000 in AMC or put $1,000 in AMC on Friday, or we're going to run up this little penny stock and then we're going to short squeeze it. Then we're going to blah, blah, blah. Hey, that's fine. I'm not telling anybody what to do. That's not my job. I'm not the SEC. I'm not going to do that. I'm not going to condone that. But understand what you're getting yourself into. The SEC just put out, hey, we can stop the trading for any company anytime we want to. So you got to be very, very mindful of that as you're walking out there trying to follow the hype and get in with this company. And I've seen some people do it. Kevin O'Leary, he spoke about it. He said, I had my robo investor, then I had my Reddick investor. He said, I got $10,000 in a Robinhood account, and whatever they say buy on Reddick, I just buy it and see what I can make, see what happens or whatever, right? So a lot of people are young, brand new to the world of investing, and investing is so accessible now. It's so cheap. Back when I started investing, it wasn't even that long ago. It was probably 2009, 2008, 2009. To buy a stock, it costs $10. To sell a stock, it costs $10. Now it's free. Every time you bought and sold, it was $10. Now it's free for your large, big companies, right? So you see now it's on your phone. It wasn't on your phone back then, but now it's on your phone. Anybody can do it. 5 days, you can turn around and do this and do that or whatever. You're good to go, right? You are good to go. Let's schedule a promo this week also. All right. So anyway, what we are doing is knowing what you are up against, seeing the SEC shut down almost 25, 30 companies like that. Bam. Oh, hold on. I see people on, because I'm pretty sure the SEC, while you own that Reddit company, while you inside of Reddit on that group or YouTube or Facebook or Instagram, the SEC is tuning in too. They'll watch it. Then they're seeing all this volume go into this company. They see all these people running into this company. Then they can just say, hey, what? Boom, take that company off. You know, and you don't want your money tied up into it. So know what you are up against, right? Especially for all my young people. I understand a lot of people are out of work. A lot of people are searching for ways to make money. Some people are unemployed right now, or income is hard to come by, or you at home wondering other ways to make money. It's okay to do whatever you do to make money. I'm just letting you know, what are you up against, right? And that the SEC is watching, and they're cracking down, and they're suspending tradings on, they're pulling companies off of the market left and right, and they're hitting up brokers. So know what you're up against. Okay. Let me see what y'all say in the comments. The next topic we're going to get into chasing the bull. Then after we get into chasing the bull, we're going to talk about the stimulus, and we're going to do a CCIV stock review. We're going to talk about the stimulus, then we're going to do a CCI stock review. So chasing the bull. What do I mean by chasing the bull? Chasing the bull. What do I mean by chasing the bull? So the next topic we're going to get into is chasing the bull. And ladies and gentlemen, I already know. If you don't know,
you're going to learn today. You're going to learn today.
All right, here we go. Let me see what y'all say in the comments. 1 second here. Okay. All right. So what y'all say in his comments? Where my comments at? Here we go. Oh, Jonathan said, I'm here, bro. Alan, what's going on, Jonathan? That's Al's brother. What's going on? Lucky's mom said, LOL, a robbering house. Right? He said, Johnny come lately always get caught. And he said, yeah, exactly. Johnny comes lately always get caught. So that's why I want to let you guys and girls know what you are up against. A lot of people are not going to tell you that. I mean, I hate to say it, a lot of financial bloggers, you know, they do whatever it is to take clicks and to get clicks. And when you say, buy these 3 stock right now to make a bunch of money, people do it. All right. Y'all give me 1 second. Let me refresh my program. Yeah, I was getting a little lag there, and I wanted to push that in. So chasing the bull, ladies and gentlemen, this is what I mean by chasing the bull. I'm guilty of it myself, and I want to bring this up to, you know, when you see yourself doing it, try to catch yourself. When you're an investor, you have a tendency of, let's say you learn your fundamentals and you are you find something that's fundamentally sound. You find Verizon, or you find maybe you find a company like Verizon, or maybe Coinbase. We sit here and I told you Coinbase is financially strong. Coinbase haven't IPO'd yet, but when they IPO, they're going to be looking real good, right? So the finances look great. So you got all these big financial companies, and I'm going to do an episode. I saw Whitney Tilson. Shout out to Whitney Tilson when he said he talked about get rich stocks versus stay rich stocks. So I'm gonna see if I can reach out to see him and see what he want to come on to the show and talk about that. But I saw his little article in Yahoo Finance, pretty cool. But anyway, ladies and gentlemen, what I want to talk about is when chasing the bull is when you find something, you invested into it, and it's not going like you wanted to, because every day you wake up, people post up how much money they made. Whether some people will say, hey, I made this money off of Bitcoin, I made this much money off of Ripple or whatever cryptocurrency out there. Then somebody turn around and say, hey, I made this much money by renting out houses. I started my own trucking business. I brought this stock. I brought this penny stock. I brought this large company. I brought this small company. And you have all these things that are out there, right? And guess what you end up doing? You end up chasing that. Oh, wow. I heard a lot of people making money off of Ripple. So you buy Ripple. Oh, wow. I heard a lot of people making money off of trucking company. So boom, you start a trucking company. Oh, wow. I heard a bunch of people are making money off of doing this particular job. So when you do all of these things, now you end up chasing the bull. The bull is an upward trend in investing in stocks. So, hey, my buddy told me he bought a house here in Denver last year. He made 20 grand, 50 grand, 60 grand, or whatever. I need to buy a house in Denver. Oh, wow. My buddy told me he's doing this. Now, it makes sense in certain things. When I see everybody running, or I hear the bull, I hear everybody's feet going boo, boo, boo. I'm not crazy. I pull it up, I look at it, and I see, man, I think I missed out. Well, you know what? Let me put this as my to-do list, and I'm going to wait till it comes back down. I'm going to wait till it cools off. Sometimes it may not cool off. I may have to just jump on that train, right? But the bull gets my attention, and I read the bull and I pay attention to the bull. But the downside is a lot of people, when it comes down to the bull market, a lot of people end up chasing everything. Just like we had Antonio say, hey, man, I made a lot of money off of Gush. And people Googling Gush. Ooh, Gush. Oh, he made a lot of money. Let me jump in there. And they jump right in there right when it's getting ready to fall off, right? So what I always tell people, stay on your course of whatever it is that you're doing. You already know, we already know if you invest in the SWPPX over and over and over and over and over and over, you're going to beat 90% of investors. So this is how people end up with 2,000 things in their portfolio. Because one day they hear about CCIV, then they hear about ABC, then they hear about AFJ, XYZ, this, and you end up spreading the money all over the place. And then when you spread money all over the place, when you're chasing the bull, when you spread money all over the place, you win if it's a bull market. But now this money is spread all over the place. And then you look at your overall movement, it's not even moving. Year after year, your portfolio is staying the same due to chasing the particular bull, right? So my way and my suggestion to you, if you have a portfolio out there and you're looking at something new, instead of just throwing it on in there, I look at it and say, well, I look at it like my starting 5 or my starting 10. Well, I got 10 people on the field already that's in my portfolio. Are you good enough to replace this one? Are you good enough to replace that one? Or you got to be something real special to get a whole nother position. But just like when you have, let's say, the Denver Nuggets already have a starting 5. They got a center, a point guard. They got a 1, 2, 3, 4, 5 position, right? If I wanted to play for the Denver Nuggets, the head coach over there is going to say, well, can he replace my number 1, 2, 3, 4, 5? If he cannot, I'm sorry, he does not get a position. That's the way you need to look at it versus trying to chase something. That's how people end up with a portfolio with 60, 70, 80 things and don't even know how I got there. How I know? I was that guy. And I've seen plenty of my friends the same way. And the reason why that's a losing formula, because when you got all these different things in your portfolio, the guy over there with 1, 2, 3, or 4 stocks, his overall portfolio is just beating yours. And this is what investors amnesia. They have 60 positions, and that 1 or 2 or 3 they get right, they go tell everybody. But they won't tell you about the other 50 they got wrong. They'll tell you, oh, look at my 1, 2, 3. Look at it. Ooh, it's going good. It's going great. Right? Even when the market takes a downturn, I have to look at it and say, well, should I be doubling up on what I already have, or should I be trying to get something new? Because I can't get it all right. I can't get everything. Impossible. Right? Now, that was my little segment on chasing the bull. The next thing we're going to get into the stimulus package. Then we're going to get into the CCIV stock review. So the stimulus package. I promised, I can't remember the person's name, but they always came in on the live and kept asking me to review this company. So I'm going to do it next. So the stimulus package is already, it's common sense. Everybody already know $1.9 trillion stimulus package was passed by the House. This should be no shocker there. The House is ran by the Democrats. So, the Democrats was already big on getting the package done. So they got it passed. Now it's on to the Senate. I told everybody, I think it's within the next, by the end of this month, it's going to get passed. I don't see anybody debating should we have I don't see anybody debating whether we should have a stimulus package, not stimulus package, but a stimulus check. I see everybody. The big talk is the unemployment. I want everybody to comment. Do you think unemployment should be raised to 15%, to $15 nationwide? On a federal level, should unemployment be raised to $15 across every country? If they raise the federal level to $15, that means everybody gets $15. What are your thoughts? And you can comment with your thoughts, and I'll tell you your thoughts or whatever. But the whole point about that is I don't agree with it, and I don't think it'll get passed. I did kind of see the Senate was saying that they were going to they was looking at to incentivize companies that pay people more money. Like you get tax write-offs. Like if your company paid your employees, I don't know, over $15, you may get a tax credit or something like that or whatever, right? I can get down with that. But the federal level, everybody getting $15, that's crazy. The reason why is the cost of living in certain areas, they don't match. They just don't match. They do not match. So for prime example, $15 an hour in Seattle makes sense. $15 an hour in San Francisco, minimum, makes sense. $15 an hour in LA makes sense. New York City, I can see that makes sense. Those are very high cost areas, right? But when you take $15 an hour down to my hometown of Waynesboro, Georgia, or a small town in Mississippi, or a small town in Alabama, $15 an hour, that's not a lot of money nowhere, but that's a pretty good piece of change, right? That's a pretty good piece of change. That's what I think about it, right? So when we look at this, is just putting out there saying everybody get $15 an hour. Yes, that's cool for the people in the large cities, which are usually Democrat ran, like Los Angeles and like Seattle and Los Angeles. And I could understand Nancy Pelosi and all the Democrats saying, hey, we need to get minimum wage up. Makes sense. But on a federal level, that's crazy. On a federal level, $15 an hour, that means the person, I'm going to tell you like this, my first job was Domino's Pizza. I worked at Domino's Pizza, right? And when I got there, I was getting $5.15, and I was happy to get that $5.15. And then I worked my way up to where I got a blue shirt. I was a shift lead, and I was getting $6. Everybody was jealous of me that I was getting that $6. I was in high school, 16 years old, getting $6 an hour, and this had to be back in 2002, 2001 time frame, maybe 2001, 2000, 2001. So between 2000 and 2002, I was getting $6 an hour, and that was a little bit more than minimum wage, but that was very good, right? Now we're fast forwarding 20 years later, and everybody wants to quadruple what I was getting back then. Now, I do understand inflation. I do understand the price of cost of services or whatnot. But the case is when you look at everybody raising their value up that high, $15 an hour, man, that's crazy, in my opinion. Let me see what y'all saying. Lucky's mom said, I only disagree because it will cause everything to go up in price. You are right. And when everything goes up in price, what is that called? What is the economical term for when everything goes up in price? When everything goes up, when price of goods and services go up, what is that called in the economical term? Like his mom said, we the customers would have to pay for that increase. That's what everybody thinks. Everybody thinks the companies are just going to lose the money. They think that the companies are going to pull out of their EBITDA, their earnings before inflation, taxes, amortization, whatever case, y'all know what I'm talking about. They think they're going to pull out of that and pay everybody else more money. They think corporations are going to lose it. Hey, go look at it. Y'all got it. F first said inflation. Max B, what's going on, Max B? Inflation. John Thomas said inflation. Exactly, right? So when you have McDonald's, if you was the owner of McDonald's, you was the CEO, and these people your workers, you were paying $7 an hour. Now, these people coming in, they ain't going to make more burgers. They're not going to make the burgers better. They're not going to make the burgers faster. They're going to use the same tactic to make the burgers. The customer want to pay the same price. If the customer wants to pay the same price and the employee wants more money, that means the corporation is going to have to put out that money. That's automatically going to take down the earnings of companies already. That can take down stocks immediately. Because how are you going to make more money if your earnings, because it's all about retained earnings. Where do we see retained earnings? Where can we see a company retain earnings? Ladies and gentlemen, if you don't know on this show, if it's your first time tuning in on the Investor Show, if you don't know, you're going
to learn today. You're going to learn today.
Exactly, right? Where are the retained earnings? in the retained earnings, where can you see that at? On the income statement, the balance sheet, or the cash flow statement? The retained earnings is how much money is the company actually retaining. So this is where is the money going to come from, right? So what the company is going to do? You know what the company is going to do? McDonald's is going to go out there and say, all right, these 10 people that I was paying, $8 an hour, since they want me to hire more workers, they're going to put out kiosks. Yeah, y'all going to get $15, but I'm going to have half of the other people, right? Max B got it right. Income statement. No, that's not going to be on the balance statement. That's going to be on the income statement. But that's good enough. Congratulations, Max B, for getting that right. Congratulations. There you go. Congratulations to Max B for getting that right. So anyway, right here, ladies and gentlemen, let's see what else y'all are saying. LK Ross said $15 hours is hood rich in some areas. I see the price of everything going up. That's cool as long as my pay increase to compensate the rising cost of everything. See, there we go. LK Ross saying, hey, I want to get paid more, but I don't want to pay more for the goods or service. Where y'all think this money is going to come from? Either the corporation is going to lose the money or they're going to raise the prices. There's three ways. Cut back on the workforce. You can cut labor. The company can cut labor. One, they can make more money by cutting labor. Two, raise prices. Nobody wants prices to raise. Everybody loves that dollar menu. Nobody wants a $2 menu. Everybody wants a dollar menu. What's the third thing you can do, right? Now, if nobody wants to pay, if corporations, if they want to keep the same amount of employees, pay them more money, that means the corporation is going to have to pay for it. Either the corporation is going to foot the bill, they're going to hire, they're going to cut workers, cut the workforce, or they're going to raise prices. That's it. This is that investor show mug. Y'all make sure y'all get it. This is how you know what that retained earnings is. Man, everything tastes so much better, and financial reports become so much better when you get the investor show mug. I'm telling you, y'all grab y'all one in the description box. Man. But anyway, you're right. So you got three ways. Either the corporation is going to foot the bill, you're going to cut your workforce, or you're going to raise your prices. Which one you think corporation is going to do? They're going to cut the workforce and they're going to raise the prices. You see those kiosks in McDonald's? Y'all remember the Cookies Famous Amos? Me and Wiley Amos, we was in South Carolina somewhere. Where we was at in South Carolina? It wasn't too far from Augusta, Georgia. I was at home, and he was in South Carolina for some reason, and we met, and we decided to go sit down at this McDonald's. I met him at his house where he was living at. He took me to McDonald's, and we go to McDonald's, and we go to a kiosk. Famous Amos is about Wiley Amos is about 83 years old. So we walk in. I walk up to the kiosk. I order the food from the kiosk, ask him what he wants, and we go sit at the table. And he was just blown, like, "What are you doing?" I'm like, "This is what they do." And he was like, he was just so blown. He was just thrown by it, right? So what you're going to see, corporations. I believe if I was in that position, hey, what options do I have? Me personally, my ethics, I would pay some of the money. I don't mind paying people more money if I have the money to pay, right? But I understand business that because employees, let's be honest, as an employee, you don't care about the overall health of the company. That company go bankrupt, you're gonna go. Those people at McDonald's are gonna go straight to Burger King. They're gonna go straight to Wendy's. They don't care about the overall health of the company, right? So they're not that loyal. I mean, I worked at Domino's. I just wanted school clothes money, gas money, and money for my pocket. I want to get some money for some clothes, some gas, and money for my pocket to go do whatever else I want to do, right? So I didn't care about the overall health. And guess what? Domino's at that job I worked at eventually did close. Was I upset? Yeah, I was upset because that was my money, but I just went on and got another job, right? So corporations, they can either pay the money out themselves, take it out of their earnings. If they take it out of their earnings, that's going to hurt you as an investor, right? Because we're going to see companies like McDonald's are going to get hit the hardest. Companies like Chipotle are going to be hit the hardest, and you're going to see their liabilities start to increase, their cash flow start to decrease because they're going to have to pay more money to people. That's one thing. So now you can see how that train can hurt people and things like that. The second thing is they're going to stop hiring as many people. Instead of having a staff of 10 people, they're going to have a staff of 3 people. When they have that staff of 3 people, then they're going to turn around, they're going to invest into technology like kiosks. Because guess what? We as a customer, we want everybody to get $15 an hour, but we want a dollar menu. How does that make sense? Right? So let me see what Ashar was saying in the comment. Max B said, I'm not paying $5 for a McDouble if they pay $5 for, yeah, you know, that's what, hey, everybody wants everybody to get higher minimum wage. I want everybody to make as much money as possible, right? You know, I'm not going to disparage anybody, but I look at the bigger picture. When I was a kid, I didn't care about the bigger picture. I remember eating at Feed a Kid in Georgia. When they would come down there, they would deliver. They had a summer program. In that summer program, they would give us a meal. I would get out there in the summer. I would ride my bike to the park. They would, you know, we would play like football or catch or something, and we'd get a meal. I would go home. I didn't care where that money was coming from. I didn't care what social program that was and how that was going to affect my life. I didn't care about the bigger picture. All I cared was riding my bike there, playing with friends, having a ham sandwich, riding my bike back home. That was it. That was it. Antonio said, I don't agree with it. Every company can't pay $15 an hour. Mom and pops can't pay that. You are 100. And I didn't even get down to that, Antonio, about the small companies, the little companies, right? The small companies like the mom and pops. And all y'all got that right about inflation, right? You're right, Antonio. Your people will hire less. You're definitely right. Right here. LK Ross said, in the short term, deflation, because you can buy more, but once inflation hits, most people will get screwed and the interest rates will rise, et cetera, et cetera, et cetera. Yeah, I think, yeah, you're right. In the short term, everybody, oh, I got $15. You know, here it is. Been in the military. Everybody out there knows that I'm a chief in the United States Navy. And I was stationed in Hawaii. When I was out in Hawaii, you know, the cost of living in Hawaii is more expensive. So you make a lot of money in Hawaii compared to other places because you make money depending on where you live. So I had my, you know, I was making pretty good money in Hawaii. I leave Hawaii, I moved to Denver. I get here to Denver and I'm like, man, everything here is so cheap. Because I was so used to gas price, the milk costing $4 or $5 and crazy prices of Hawaii. And I get here and it seemed like everything was just so, gas prices was cheap, milk prices was cheap, everything was so cheap. And I was in hog heaven until my pay adjusted to Colorado. That's when I was like, whoa, wait a minute. So for the short term, I was rich. I was like, man, look, I can buy all this stuff. Look, all this stuff I got. I can go buy this, and this. Because I was still getting my Hawaii pay. Once my Hawaii pay switched to Colorado, oh, whoa. Yeah, that was good with my old check, but them checks ain't hit my accounts like it used to, right? Man, I think that's the exact same thing when you get $15 an hour. It sounds good in theory, but what's going to happen when you have, what's going to happen to the person who is getting $15 an hour right now? Let's say if I was the manager and I was getting $15 and everybody else was getting 10. Now minimum wage is 15. Guess what I want? I'm like, I don't want 15. I'm like, man, I don't want 15. You got to move me to 20. So it's just not the person getting the minimum wage. You got to think about it. Everybody has to increase. Everybody got to increase because I can't go in there and say, hey, y'all, everybody that was getting 17, now you're going to get 15. That's not going to happen. So when that happens, when that person gets 15, they're going to turn around and say, well, hold on, I don't want to get $15. You got to push me up too. So that's what you got to think about it. That's funny. He said, Max B said, I think I'm Buffett when I use my mug. Shout us out to Max B out there in Washington. He said, how do you feel about the banks? In what regard? In what regard do I think about the banks? Somebody on Facebook said, how do I feel about banks? Hey, how you doing there, Miss Ruby? Down there in Memphis, Tennessee? How you doing, Miss Ruby? Dervin, he's laughing. He said, I love my Hawaii pay. Exactly right. Minimum wage should be $24 if they kept pace with the productivity. Break that down, Gary Wallace. Break that down. Minimum wage is $24. Everybody get, so the person that's taking orders at Wendy's get $24. So beloved County said, I live in San Francisco before moving to Colorado. Minimum wage was $15, but the rents were through the roof, and $15 were nowhere near enough. You're right. $15 an hour, that's crazy. $15 an hour is in San Francisco. I think the average house in San Francisco was $1 million. The average house. And when I talk to my buddies out in San Francisco, they're like, yeah, man, I'm minimum wage. I'm like, how can you, like, man, you got to have 2-3 jobs. I'm like, that's crazy. I'm like, why would you live there? I don't get it. Is San Francisco that dope that people got you? I can't do it, man. I'm just like, why not just go upstate California, go out east to Nevada, to the desert, maybe Arizona, go to the outskirts. I couldn't do that. Okay, somebody said investing into banks. Investing into banks to me is a stay rich company. They are stay rich. Like, will you get rich overnight with investing in Bank of America? Probably not. But if you hold Bank of America for a time and collect a dividend, yes, it's going to go slowly over time. Yes, I don't see nothing wrong with investing in the banks. I had Bank of America for a long time, but I switched with my portfolio. I switched more towards a growth, right? So I wanted to maximize the growth. So I wanted to get in stocks that had a little bit more burn, higher beta. They had a little bit more growth to them. So banks are unfortunately not really good for that type of portfolio. If you have a more speculative growth portfolio, banks are a stay rich company. I got to get Whitney Tilson. I saw that. That's companies you can put to Bank of America. Even when Bank of America almost went bankrupt, Bank of America did go bankrupt and they bailed them out back in 2008 or whatever. I think they merged them with Merrill Lynch or whatever it was, but they stuck around. So that tells me right there, they're too big to fail. So yes, nothing wrong with investing to Bank of America. I can't see you go wrong with getting Bank of America and not some of the big financial. J.P. Morgan, that's a big one. That's the one that I have had in a couple portfolios. But those are the big bank companies. Don't think you're going to get rich overnight. You're going to connect a nice little dividend, and it's going to grow a little bit, but that's about it. Jonathan Williams says, love your show, bro. Always something for our development. Nothing but love this way from Charlotte, North Carolina. What's going on, Jonathan? Appreciate it. Appreciate that love. Appreciate it. Antonio said, you got me missing that BAH. I'm back in the military days. Good to exactly. And then you got to think about it. When you are in the military, you got what about that BAH? What you know about not the BAH, but what you know about that COLA, cost of living allowance? It's about to turn into a veteran show. Cost of living allowance. What do you think about that? So, ladies and gentlemen, let's get into our next topic. Let's do this CCI review. CCI stock review. I promised. I can't remember who it was, but they would come on every episode. I don't know, for like a couple weeks. Every time, people kept asking me about that CCI review. So we're going to do that. Let's do it. CCI stock review, ladies and gentlemen. CCI stock review. CCI is a company called Churchill Capital. Let's see what they are about first. Let's pull this up. Right here. This is Churchill Capital 4. About us, our founder, Michael Clean, is also the founder and manager partner of M. Clean and Company. I'll tell y'all about the finesse move behind that, which is founded by in 2012. McLean is a global strategic advisory firm that provides its clients a variety of advice tailored to objectives, blah, blah, blah. In September 2018, was launched Churchill Capital, a special purpose acquisition company, a SPAC. That's kind of the hot thing right now. Special Purpose Acquisition Company, SPAC, which raised $690 million in its IPO and is listed on the New York Stock Exchange as CCC. The company merged with Clearview Analysis, a global leader in providing trusted insight and analysis on accelerating the pace of innovation in March of 2019. Continuing the success of Churchill Capital, which is CCC. Let's look up CCC real quick. So you can see CCC, what's the first thing? Let's see what that is. Let me see right here. Let's see. Okay. That don't seem right. New York Stock Exchange under CCC. That's not it. Churchill Capital. I don't see them on here. CCC. Okay. So anyway, I don't see them on here what they're talking about. Okay, so continuing success of Churchill. We raised $690 million in the IPO 2019. The company is listed in New York Stock Exchange as CCX.U and is actively seeking an initial business combination. In February 2020, Churchill Capital 3, our third SPAC. So Churchill Capital, apparently they're doing this over and over and over. It's the third. It completed a $1.1 billion IPO. The company is listed on the New York Stock Exchange as CCXX.U. Let me look it up. CCXX.U. And this is Churchill Capital 3. Let's see what their price is. I don't see a price on them. Had it gone public yet? I don't really see that one either. I see people talking about it. Okay, so February. Okay, in February 2023. So we're still in February. Maybe. Oh no, that's 2020. So yeah, that should have been up. I don't see it. It says IPOs listed on the New York Stock Exchange and CCIV. On July 2012, Capital Churchill 3 announced a defining agreement to merge with MultiPlan, a market-leading technology-enabled provider of end-user healthcare. Okay, cool. So it says our strategy is to identify and complete our initial business combination with a company in the industry that compels the experience and expertise of our management team, board of directors, and operating strategic partners who are comprised of groups of individuals from leading Fortune 500 companies. Our track record provided a highly attractive opportunity to prospective targets looking for proven, expedited access to liquidity, capital, and value creation. Let's look at the team. Let's look at the management team. Who's on this management team? Okay. The CFO is Mr. J. Okay. Only two people there. Michael Clean. And the reason why this is important because this is where they're going to put their money. Operating partners. So when I look at this, I'm going to look a little bit deeper and see what's the history on these people. Because apparently they're supposed to come from Fortune 500 companies. And he's an operating partner across technology sector. So Sam is very big into the technology sector. Let's look at another one. I'm not going to go through all of them. We got Sir Martin Airlines. Okay. So right here, he has experience in airlines and technology. So why is this important? I'm gonna look at one more. So we got airlines, technology, and she has a lot of experience in retail and healthcare. So she got retail and healthcare and airlines. The reason why that's so important because you look at this last line, what did they say? They're pretty much going to be investing money. So right here, they're telling you right here, our strategy is to identify businesses that compels with the experience and expertise of our management team. So the management team has a strong a strong alliance to airlines and a strong alliance to airlines, a strong alliance to what else? Strong alliance to airlines, healthcare, and technology. This is where you're probably going to see where they're going to put their money at, right? So, okay, so we kind of got an idea. It's a blank check company. Their job is to do an initial public offering, get the money from the public, and take the money from the public and invest into other people going public. So they're the ones that got a bunch of money that gives people money. Essentially, it's what it sounds like. It's almost like a Shark Tank in a way when you think about it. It's kind of crazy. So let's look at their finances. Let's get down to the nitty gritty. Let me turn this one off. You know what? Here, let's go to investor resources, SEC filings. Okay, let me switch it over here. I already got it up anyway. This is their latest 10Q report. Let's look at the 10Q report here. Let's look at their 10Q. Now we know what CCIV is about. Churchill Capital. This is the 4th version. So they got a regular one, then they got a second one and a third one and a 4th one. Right? So this is what we're going to look. So now we're going to look. This is the latest 10K report. So let's go all the way to the top. Churchill Capital 4. Now the thing about it is, I look for the competition. I haven't been able to find a blank check company or a SPAC company as of yet to be able to become profitable. I haven't seen not one of them. I looked up the largest ones. I haven't seen one profitable. Y'all let me know if they are profitable. Please let me know. So also too, this is where you get phone numbers for companies to tell you right here. This is their phone number. So right here, titles of the company. They got CCIVU, CCIV, CCIVWS. So CCWS are warrants. Who knows what warrants are? So they got warrants, then they got common stocks or whatever, right? So let's look at their financial statements. Okay, as of September 30th, 2020, their assets. Okay, is this in thousands, millions? It don't say, does it? So since they don't say, I'm going to assume this is a million. So they got $4.2 million in cash, prepaid expenses, total assets. They got $4.2 million in cash. Their total assets are $5.3 billion. Deferred taxes, marketable securities, total assets. Okay. So the total current assets are 5.3 million. And it looked like their total assets is, let me see, 1, 2, 3, 2 billion. So they got 2 billion in total assets. So now this is something to be very, very objective of. So right here, their marketable securities are held in a trust account. Their trust accounts, while their money's in a trust account, their money goes to, while their money's in a trust account, their money is invested into T-bills. Who knows what T-bills are? So as long as the government interest rates, they're like the most secure things. So if interest rates go low, this could hurt the company very bad in T-bills. You can learn this through their risk factors. So all their money, they got like $2 billion. So all their money, essentially, all their assets, most of the assets are tied up in T-bills, and they got $5 million in cash, if I'm reading this correctly. Okay, current liabilities. So the total current assets are good. The total current liabilities are good. So they got, they only got 33,000. Okay, so they got a lot of money because they took a bunch of money from the public. Well, everybody buys the stock. I'm not mad at them. Their total liabilities, 1, 2, 3, is 72 million. Not bad. 72 million total liabilities, total assets of 2 billion. That's pretty positive. Commitments. I'm not sure what the commitments are. That might be something special to this. So yeah, the shareholders' equity is at 2 billion. So a lot of cash on hand. So they're taking cash flow losses. So the cash flow losses are staying the same. I'm guessing the losses are from they taking a net loss of 1.155. Okay, 155 million. Ending there, losses before income taxes. So I'm guessing their money is going out on buying stuff. I'm pretty sure they got to pay people. They got fees, things like that. So they got a net loss. They're not profitable. They're financially strong. They just don't make any money. The cash flow is negative. So I want to understand, okay, let's look at this. Let's see. This company is a early stage emerging growth company. As such, the company is subject to the risks associated with early stage growth companies. As of September, the company has not commenced any operations. So right here, as of September, when they put out this report, they hadn't done anything. So pretty much they just raised a bunch of money, and it looked like they was paying their employees and people like that. So they're unproven, right? All activities from the period of September and from so right here, they're telling you right here, all the activity of the period of April 30th inception through September 30th relates to company's formation of an IPO. So this is pretty much they got a bunch of money, and all they did was formulate this thing. They haven't done anything at that time. The registration of IPO effective or whatever. So looking at this company right here, look at Miss Lucky's mom, short-term debt. She got it. So right here, short-term debt. So so Lucky's mom, since you said that, let's go ahead and look. Why is this such a big thing? Why would you care as an investor? Why would you pay attention? So you go up to this, and we're going to go to risk factors. So with all of your money in T-bills, if something was to happen with T-bills, that means something bad. So of course, right here, the proceeds held in a trust account is invested only in U.S. Treasury obligations with a maturity of 185 days or less in money market funds, meeting criteria under Rule 2A, blah, 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 of Investment Companies Act. So they're telling you right here. So if something happened with the government bond, if our military was a default or whatever, this company would collapse. Not collapse, but if our interest rates went negative, a lot of that money would be eaten away, because they're telling you right now, all their money, their $2 billion is sitting inside of T-bonds, which is giving them a mutual fund, which is interest rates so low. They're not making that much money, but it's better than a checking account, better than a savings account. So, okay, warrants just means they can buy the stock at a set price and whenever they want. It usually come with a date. That's pretty good. It usually comes with a date, but that's pretty much what warrants are. So right here, let's go ahead and give the verdict. What's the verdict on CCIV stock? CCIV stock, this is a SPAC company. This is the fourth version. All this company did was formulate a bunch of people with money, got together, IPO the company to raise a bunch of money. They got $2 billion. And now their whole job is to go buy other companies and to help other companies go public. So financially, they're good because they don't do anything but pay themselves, really, pay fees, pay themselves. They raise a bunch of money for it. They haven't done anything as of their latest 10Q. So they're unproven. They haven't done anything. So that's why I don't look at it. So my verdict on this company, what I invested to this company, the reason why it's unprofitable, it hasn't done anything. It hasn't made one acquisition. I haven't seen how they made any money. And I think they're $30 right now. But I got to give it.
Hell to the no, to the no, no, no. Hell no, no, to the no, no. Hell to the no, no, to the no, 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 no. Hell to the no, no, to the no, no, no.
No, I would not be investing in CCIV. Unproven. They haven't done anything. Just a hope and a wish right now. Yes, they are financially strong. Yes, they are financially strong. They have a lot of money, but no, they haven't done anything. Zero. I mean, they got a great potential. A bunch of their balance sheet looks amazing. But when you stroll down to the cash flow statement, they haven't done anything. They haven't made one acquisition. They haven't brought anything. They haven't sold a company, help a company go public. So no. I need that. I don't believe you. You need more people. Max B, maybe they did buy somebody, but according to their last financial report, I haven't seen anything where they had an acquisition. Unless I looked over something on the company website, I haven't seen where they brought anything. So, no, I'm not buying them. It's too many, and there's nothing wrong with that company. The question is, It's nothing wrong with that company. It's the question of, if I have $1,000, I can go buy Southwest Airlines, I can go buy Disney, I can go buy Six Flags, I can go buy Apple, I can buy Clean Energy, Enphase, Crowd, all these household name companies that you know of and heard of, and you know exactly what they do. McDonald's. At this point, maybe when next quarter come and I can see something, then I can maybe look at it. Let's go back here. Let me see something real quick. Churchill. Let's get back to where they're at. $30 right now. Churchill Capital. Okay. Okay. So let's go back here. You know what? Maybe I'm wrong on something, right? So here it is. This is their company. Looking at press releases. Churchill Downs Incorporate fourth quarter results. Hold on. Where is this at? Hold on. Let's go a little bit further. Let's see what they did. Look like they just had a report come out. I looked at one from September. They got one from February. So let me look again. Maybe I spoke too soon. Adjusted EBITDA, went able to run despite unprecedented challenge with COVID. They're doing something with horse. Hold on. Wait. I got to make sure this is the right one. This might be another Churchill. No. There's a couple Churchills too. That's what you got to be careful with that. You got the original Churchill, then you got Churchill 1, Churchill 2, Churchill 3, Churchill 4. So this is Churchill 4. So we're looking at, okay, here it is. You're right. I see it right here. Now I see what y'all talking about. Lucid Motors and Churchill Capital announced investors call to discuss a proposed merger. So it's a proposed. All right. Let's look at it. Let's see what they're saying about Lucid, about blah, blah, blah. They intend to send them submitted S4. Okay, I see what they say they're doing. I haven't seen anything. What does this mean? They're saying right here they're going to do a conference call. I think that was last week. So Lucid Motors is going to go public. So they're looking to take Lucid Motors public to merge with Churchill Capital. So it looked like their job is they picked this company, Lucid Motors, to take them public. And we're going to be able to see what they're going to do. Lucid Motors hadn't gone public yet. I haven't seen anything with them. So yes, I see it right here. I see what y'all talking about. I see it on their website. So you got a Churchill 4. They did some with Lucid Motors. Yeah, right here. So right here, this has not released. I haven't seen anything as of yet relate financially. Let me take another look. Yeah, I looked at the November 9th was the last financial report they put out. So they're looking at doing something with Lucid, but I haven't seen anything yet. How much money does that mean? How do they make money from that? Do they get a piece of the deal? I need to get a haircut. Woo, boy, I'm looking rough. LLJ said, I'm a little late, bro. I catch the play black. Good to catch you live. You've been dropping some pretty gems on this crypto. Thank you. No problem, man. No problem. Oh, everybody like my hell no. Everybody's laughing at my little sound effects. Yeah, I got a couple sound effects in here. Hopefully they don't sue me and take down my whole YouTube podcast for playing that. Kelly's asking me, what do I think about AXTI? That have to be for another show, not this episode. Oh, it's starting to fall on me. There we go. They just did. Yeah, they did. They just did the deal. I was. Yeah, they're supposed to be doing buy EV car company and changing the name. I don't think they're going to buy the company. When you look at this, it's saying they're going to merge Lucid to go public in a merger. So this, yeah, think about it. Churchill, their job is to like take companies public or something like that. So, Lucid Motors is setting a new standard of sustainable mobility advanced EV corporation, a special purpose acquisition company, announced today that they have entered a defined merger agreement. CCIV and Lucid are combining a transaction equity value at 11 billion. The transaction values Lucid at a initial pro forma equity approximately 24 billion at the pipe offer of $15 per share, and provide Lucid with $14 billion in cash. Okay. Assuming no existing CCIV shares are remaining for, okay. Okay, so they're going to help Lucid raise some capital. How much? Believes that Lucid superior backed by clear demand of essential EVs, highly competitive market. Windows to increase sustainability. We are pleased to partner as it delivers a high disruption EV. Lucid is setting a new standard. Okay, so they got together. They're going to do $11 billion deal. Now, this $11 billion deal, this is going to give $4 billion to Lucid. How much money will CCIV make? Because I don't see anything in here saying that CCIV brought $2 billion or they put up, they own 25% of this company. The transaction includes, okay, here we go right here. This is something good. The transactions includes an approximately $1 billion cash acquisition. Okay. By CCV and $2.5 billion and at a 2.5 fully committed pipe investor lockup provision that binds holds will be on closing. $15 per share, a 50% premium. Okay. All right. Okay. I can see that. So it's looking at the transaction includes a $2.1 billion cash contribution by CCIV. Hold on. So they only got they're giving them $2.5 billion. They only worth $2 billion. That's all they got in their account. Well, the last account that we just saw, they had about $5 million sitting in their account. They had $2 billion sitting in T-bonds. Well, I'm pretty sure they could use credit. They don't have to use all their cash. Net asset value. So they're going to get them at $15 a share. Okay. Anchored by public offering. Okay, cool. Okay, I can see it could possibly be a financial gain for them. I'll keep an eye on it. But until that point, I still have the same qualms until something is proven. So anyway, ladies and gentlemen, that's going to be tonight's show. That's a CCI stock review. That's also going to be the CCI stock review. Hope y'all took something away from the tech stock rebound, the SEC crackdown, all the other great stuff. All right. But I definitely appreciate y'all for taking y'all, what is this, Monday night? Let's see what the market brings tomorrow. Happy investing. Make sure you grab your Investor Show cup. If you haven't done so already, make sure you grab that whole entire Wesley Learns book series and get your Investor Show mug. And you hit that like, subscribe, comment, and share button. Follow us on Instagram at the Investor Show. Follow us on YouTube. All of the good stuff like that. Also, check us out on Spotify, iHeartRadio. If you're catching this on Spotify, iHeartRadio, iTunes, or whatever, you follow us on YouTube and all of the good stuff. All right. Max B said, so it's a maybe instead of a hell no. Yeah, it's a maybe. I got to go back and, I got to go back and give it a little maybe, right? Maybe we could see. But up until that point, when I was looking at the 10Q report, I ain't seen nothing show up on it. What you call it? Big Al said, great books, good for your kids. Yes, you know, as you guys and girls learn this, make sure you are learning this as well with everybody else. All right. So I hope y'all like this. Hopefully y'all enjoy it. I'm continuing to get better, bring y'all better content. Thank y'all for hitting that like button, subscribe button, getting us up. You know, we're on our road to 50,000 subscribers here on YouTube, 30,000 on Instagram, on Facebook. I don't know, 80 something, whatever it is on Facebook. Y'all keep hitting us up. Make sure we go up. Numbers go up because that's what I pay attention to, the numbers the most. So as long as y'all here, y'all giving the numbers, I'm going to give it to the people. All right. But ladies and gentlemen, boys and girls and children of all ages, thank you for tuning in. And into the next video, podcast, cartoon, or whatever else crazy y'all see me doing around the globe. Y'all make sure y'all check me back here. Same, well, different time. Different time, same place. It's only going to get better every single time. But peace, be safe. I'm out. Thank you.